So today, we're going to dive deep into a pretty incredible story. We're exploring how one of the world's richest economies was totally, fundamentally overhauled in just a couple of centuries. We'll be using these historical notes to trace India's dramatic economic journey under British rule. All right, let's jump right in.
It really all comes down to this one single massive question. Back in the 18th century, India's economy was an absolute giant on the world stage. But by the time the British left in 1947, it was in a completely different state. So, how on earth did that happen? What were the key decisions, the policies, that drove this incredible change? Well, that's exactly what we're here to unpack.
Here's how we're going to break it down. First, we'll get a picture of what India's economy actually looked like before the empire. Then, we'll dive into how the British remade the very foundation of that economy, the land itself. From there, we'll look at the huge impact of new trade routes and railways. And finally, we'll take stock of the economy the British left behind when they departed in 1947.
All right, so to really get a handle on the massive scale of these changes, we've got to start at the very beginning. Understanding the pre-colonial economy it's absolutely crucial. It gives us the baseline, right? The before picture that lets us measure everything that came after. And the most fundamental piece of that entire economy was the land.
What you're looking at here are basically two completely different worlds. On the left, in pre-colonial India, the person who actually worked the land, the tiller, effectively owned it. Land wasn't something you could just buy and sell on an open market. But the British, they flipped this entire idea on its head. As you can see on the right, they brought in the concept of private property, making the state the ultimate landlord. Suddenly, land could be bought, sold, and most importantly, seized if you couldn't pay your taxes. This wasn't just some tiny legal adjustment, it was a seismic shift that totally ripped up the fabric of rural life.
So, with this new philosophy locked in, the British started putting systems in place to pull revenue from the land. And this wasn't some one-size-fits-all approach. It happened in different ways all across the subcontinent. And each one of these systems had really profound and long-lasting consequences.
You can really see this new approach roll out in three big waves. It kicked off in the East in 1793 with the Zamindari system, which basically made the local tax collectors the new landowners. Then you go to the South and West, and they roll out the Ryotwari system, where individual peasants were made owners, but they had to pay their taxes directly to the state. And finally, in the North, you have the Mahalwari system, which made entire villages responsible for the tax bill. The methods were different, sure, tailored to local conditions, but the goal was always the same: create a predictable, efficient system for extracting revenue.
And wow, the ripple effects from all this, they were absolutely massive. The person actually working the soil, the tiller, often became just a tenant on land their family might have farmed for generations. That old relationship, where a zamindar might help out during a bad harvest, was completely broken. This left a huge gap, a sort of social safety net that was just gone. And that vacuum was very quickly filled by a new class of moneylenders and traders, which completely changed the power dynamics in villages and led to just widespread debt.
And this number right here, this just shows you the result of all that. By 1951, a staggering 93% of all agricultural credit, all farm loans, came from these informal moneylenders. Think about that. It created this massive, often inescapable cycle of debt all across rural India. All right, let's shift gears a bit. While all these changes were happening on the land, India's role in the global economy was being completely rewired at the very same time. And this involved new trade policies, new infrastructure, and let's say a controversial theory that tried to explain it all.
This brings us to a really core concept from that time, the drain of wealth theory. The whole argument was that Britain was systematically siphoning wealth out of India, and not through simple, old-fashioned plunder, but through the very mechanics of how they ran the place. This included things like home charges, which was basically India paying the salaries and pensions of its own British administrators who were based back in London, as well as profits from lopsided trade deals and military spending.
And check this out. You can actually see the original notes here, breaking down the different tools of this theory. It wasn't just one single thing, but a whole combination of policies that critics argued were designed to funnel resources from the colony to the heart of the empire. Seeing it laid out like this really drives home the mechanics of the whole argument.
This table, man, it tells the whole story in just a few lines. In the 18th century, India was a world leader, exporting high-quality textiles and importing gold. But now look at the shift. By the mid-19th century, India is now exporting raw materials, mostly cotton, and importing finished cotton textiles and machinery, almost all of it from Britain.
India literally went from being the world's workshop for textiles to being a supplier of raw materials for Britain's factories. This is what people mean when they talk about deindustrialization.
And if that table wasn't enough, this visual just puts it all into perspective. At the beginning of the 19th century, India was a heavyweight in global trade, responsible for about a fifth of the world's total. But over the next 100 years or so, as you can see, that share just collapsed. This wasn't a small dip, it was a fundamental reordering of the entire global economy.
So what about the railways, right? People always bring them up as this huge positive. Well, the motivation behind why they were built is really key here. The primary drivers were not to kickstart an Indian industrial revolution. It was all about getting raw materials like cotton from deep in the interior out to the ports and to move troops quickly across the vast country to maintain control. The strategic and commercial interests of Britain were absolutely paramount.
And that brings us to our final act. After 2 centuries of all these transformative policies, what was the actual state of the Indian economy when the British finally left in 1947? What was the legacy they left behind?
Let's just start with the people. At the moment of independence, the literacy rate was a jaw-dropping 15%. I mean, for a new nation trying to build a modern economy, that is a staggering deficit in human capital.
And that was mirrored in public health. In 1947, the average life expectancy was just 32 years old. That single number tells you so much about the widespread poverty, the poor sanitation, and the lack of access to even basic health care for the huge majority of the population.
Okay, so what about industry? Well, as this chart shows you, it was incredibly lopsided. Sure, the textile sector was big, but the core sectors you actually need for a modern economy, things like iron, steel, engineering, they were seriously weak. There was practically no capital goods industry, which meant India had to import all the machinery it needed to even try to industrialize. And get this, large-scale industry employed only 2% of the workforce.
So, when you step back and look at the final balance sheet, what do you get? Well, the negatives were severe. A tiny savings rate for investment, a tax system that hit the poor the hardest, and a totally distorted industrial base. But there were positives. A huge railway network, a single administrative system, and the beginnings of an independent judiciary. India inherited a legacy that was, at the same time, both modern and crippled. It was a deeply contradictory starting point for a brand new nation.
And that really leads us to our final thought for today. We've traced the remaking of an entire economy over 200 years. So the question for us today is this: which of these colonial-era economic structures, whether in land, in trade, or in industry, still casts a shadow over the Indian economy here in the 21st century? Definitely something to think about. Thanks for tuning in.